Buddy, it is Brian Shannon from AlphaTrends.net. Today is Friday, the 21st of July, 2017. I hope you had a good week. The markets did. And let's take a look here at the numbers. The S&P 500 up a 0.5%. NASDAQ basically tripled that. And the biotechs even better as they broke out and continue to rally. Oil is still in a downtrend. We'll take a look at that. There's no reason to be looking at bullish oil as far as I can tell. The S&P 500 finished just off a record high here, but still above the volume weighted average price for the week and for above the rising 5-day moving average. As I noted on Twitter earlier in the week, it was the week to date volume weighted average price that saw the volume weighted average price from this gap that saw the market low this week on Tuesday, and that's often an area where the buyers do in fact show up. So I think going into next week, the theme is really the same. We're in an uptrend, long-term uptrend. The buyers have regained control of the intermediate term trend. Our first level of significant importance will be 246. If we get below that and hold below it, then you would become a little bit more defensive, but I would still be looking at it only as a pullback within a primary uptrend. The market is, on the weekly basis up at all-time highs here. So tough to be bearish in that environment. It doesn't mean go in and just buy everything. It does mean, continue to be cautious, manage risk on each individual position that you have. The NASDAQ finished at a weekly closing high as well. It's never closed, here's the monthly chart. It's never closed this high on a weekly basis. It did today pull back just slightly, but still a green candle as buyers showed up intraday. But the level I've been watching in here with subscribers to Alpha Trends is 143.5. I don't see a big thing occurring if it were to break below that. Maybe a pullback down towards this prior level, but I think it's prudent to take a look at the volume weighted average price from the recent low and say that if it's to pull back down as far as 141ish, then it's still just a pullback within even the intermediate term uptrend. Never mind the fact that we are up at all-time highs on a weekly closing basis. The Russell 2000 still kind of toying with us in terms of it wants to prove that it can break out, but it's stalling here once again at that breakout point. So we spoke for a while about the fact that the market had this band of resistance up in here. It broke that. Now it's pulled back and is testing it here late in the week as it pulled back a little bit deeper than the rest of the markets today. But we are still holding above the volume weighted average price from this gap right here. That I think is important for the near term psychology. You could also of course draw a trend line that looks like that. Breaking trend line though doesn't mean a trend is reversing. It just means the rate of ascent has simply slowed down. So next week ideally we'd like to see this area, this prior band of resistance, hold as support. If it can do that, then it should be able to move higher. I personally grow skeptical each time, but I also tell myself, this is probably the time that it does, in fact, get up and start to show a true rally on that daily time frame rather than this grind higher, only because it's ground me out so many times, and so many times it's looked like it was going and then just, fizzled out. So keep an eye on the Russell 2000. I'm not making predictions, but I do know that the path of least resistance is higher, and my in the intermediate term and longer term, and that I would not want to have long exposure from an intermediate term standpoint if we got back down below 141.75ish. The semiconductors, this group continues to lead the market. We saw a couple of closes below the 50-day or 10-week moving average is what we're looking at right here, but we came down to the volume weighted average price year to date. Actually, we did not come down to the volume weighted average price to date. And let me just redraw that in because I first drew it off December. But here's our year to date VWAP. I thought maybe we would test that. We haven't. Looking down to a 30-minute time frame, we're above the rising 5-day moving average. I think when we look at this pullback, any pullback that does emerge rather from here, that the volume weighted average price from the recent low will be something worth keeping an eye on. That That's down near about 85. We looked at this level as a potential level of resistance, and I was very clear to say that doesn't mean you sell your long position. It doesn't mean you sell short. It means you look for evidence that the sellers are gaining control and you back off the brakes a little bit. You don't switch gears and turn around in the middle of the highway when the traffic is streaming. The IBB, this market continues to really trade the most cleanly, and as we know, it's been above the volume weighted average price from the peak after battling with that for a little while. And traditional technical analysis, support or resistance broken tends to act as support. We've got a rising 10, 20, 30, 40 week moving average. If they didn't scare you out over here, they wore you out, and now is the time to continue to be long. We made a higher high in the weekly time frame, and we continue to move higher. So this is I think a great area for investors to be in. I trade it from an intermediate term standpoint, but if you're an investor, this is the type of market that you should be long, because you've got good upside and limited downside. From an investor standpoint, your risk probably ought to be under here at this point, which is down about 309, and I wouldn't chase it. I'd say wait for a pullback, and then after that pullback stops pulling back, then don't buy the pullback, but buy on strength after a pullback. So this market is going to be, I think, the biotech's one that continues to reward the long side. Just be smart about where you purchase. Don't chase things. And let's take a look at a couple other ones. The financials have been trying to break out up here. They're holding this rising 20-day moving average, and on a weekly time frame, they still look really good here. But back down to that daily time frame, and then we can go to a 30-minute XLF. And what we're seeing in the financials is we had this rally up here, and this rally, the volume weighted average price from that level, you can see on a closing basis we're holding it. We've had a couple shakeouts below it. We came up and made this high, and we've seen lower highs. And more importantly, even as it breaks a slightly higher high, the direction of the 5-day moving average has been lower, which tells me don't trust it. But next week we'll see if it can stay in here. That 5-day moving average will flatten out, and perhaps getting back above this little band of resistance, just about 24.95ish, let's call it, that I think the financials could begin a new leg higher. We're starting to see that we had this shakeout low, another shakeout low that didn't go as deep, and now we're seeing more consistent higher lows. Energy is building. It looks to me like it's ready to break to the upside, and if it were to fail, then of course your stop would go underneath one of these lows that makes the most sense for the time frame that you personally engage the market on. I saw a lot of people get excited about the energy name this week. Energy, it broke above the 50-day moving average briefly, but what's the direction of the 50-day moving average? I say it over and over again. More important than one or two closes above the 50-day moving average is what's the direction of the 50-day moving average. And just like I was just saying about a trend line, breaking a trend line doesn't mean it's reversed and the buyers have control. It means if they didn't scare you out, possibly they'll wear you out. Now comes that time for a time correction. We need these longer term moving averages, on the weekly time frame to start to flatten out. And you could look at it and say, from the low in 2016, maybe we're going to still continue down to a 61.8% retracement. That's certainly possible. We're below a declining 10, 20, 30, 40 week moving average. That tells me money is still coming out of these stocks, and you simply don't want to be long stocks in that type of environment. You're better off with stocks like the biotechs. The volume weighted average price from the peak, you can see right here, even if getting up to, it's going to have to get above and hold above that for the buyers to have eliminated the average loser basically in the energy name. So anyways, keep an eye on the fact that they are still in a downtrend and guilty till proven innocent. CMG, I spoke about that one on Twitter just because it was interesting that the stock had. Let's take a look here. I had mentioned the volume weighted average price from the low in 2008, and it broke and closed below that. To me, that tells me that it's likely to go to the next important level. The next important level is the volume weighted average price since coming public way back in 2006. That level is down here at about 301, and if you look at a Fibonacci retracement from the absolute low to the absolute high, you can see that that's a 61.8% retracement in that general area. So regardless of what you think of the news and what you think about the quality of their food, the fact is that it remains in a downtrend. The sellers are in control. It's not pausing for anything. Look at how this 5-day moving average has rejected it while it was declining, and it still is below that. It's going to need a lot of work to change this trend, and it just doesn't look likely at this point. By the way, last week I teased about a segment about the volume weighted average price that I would be doing in the next week and a half. That means it didn't happen this past week in the next half a week or so. By the way, this CMG looks like a real downpour here, a real gully washer, as the guy in the news said last night. And I told my wife I would say that word in this video.